Without delaying, let's start with the chapter that is retail banking and introduction. First of all, there is need to give the overview. There is need to concentrate on the overview of the chapter. Why there is a need of banking or retail banking arose. In the earlier system, when there is a barter era, when we talk about the barter system, their goods are exchanged for goods. Goods are exchanged for goods. There is a no provision of money. Money was coined in the year 17th century. In the 17th century, earlier there was iron, gold, or bronze coin, right? There was coin over there, and at that time there was no saving habit was cultivated in the people. So first of all, they when we talk about the retail banking, they cultivate the saving habits among the individual. When we talk about the retail, by name it is clear it would deal with just the individual needs or to make the product that is feasible for the individual. So when we talk about the retail banking, it would deal or cater the need of the individual. You can relate these things when we talk about the manufacturer and to the ultimate consumer. There are the lot of the channel are available over there, or we can say the intermediator. We can see the wholesaler, we can see the retailer, then the ultimate product retailer too, we can see the retailer too, and then the ultimate product was reached to the customer. So there are larger the number of the intermediator, lesser the amount of the profit that we are fetching. But when we go with the direct chain, as the technology get updated and we can get a direct link with our customer, without we can eliminate the retailers, or we can say the intermediator from the line. We can give a direct access, and if we are having a direct access to our customer, we are having a higher amount of the profit. So what does the banking do? First of all, there is need to know about how the money developed, why there is need to saving or habit is to be cultivated. First of all, the first aspect is that there is need to ascertain whether there is a saving habit there or no. Right? The topic we're gonna cover over there, the introductory part and the chapter number 2. When we talk, there is a barter system. When we talk about the barter system, then goods are exchanged for goods. There is a no provision of money. Money was introduced in the year 17th century, right? In the 17th century, then there is a introduction, or the term money was coined over there. Then in the present scenario, there is a digital money. Mostly we are shifting to the Paytm, GPay model, or the scan code. We are shifting to the digital money, or we can go with the cards method. We are having a credit card, we are having a debit card with us. We are opting this type of the money model. When in the year 2016, there is a demonetization concept was done. The demonetization concept. By taking the advantage of this demonetization concept, Paytm launched the app Paytm Karo. Have you heard this notification at that time, that you can make a online payment transaction? Then they will give you a gateway to access to the particular thing. In this way, the money was developed, and now we have shifted from the coin to the digital money. The era from the coin to the digital money was like this. Now there is a lot of concept. There was not a banking system. Banking Act was regulated by the Banking Regulation Act 1934. Right? There is a RBI, who is known as the Apex Bank over there in the banking sector. RBI is known as the Apex Bank, and it was governed by the RBI Act 1934. When we gonna go on that, the all the power regarding the currency publication is vested with the RBI. They gonna make the money or publish the currency note in respect of the gold amount of the gold that was submitted, and on the basis of that particular gold amount they're going to publish the note, and the right to produce a coin was vested with the SBI. So this is the overall view how the money come into the existence, and how we gonna shift it from the barter to the currency rate, and how we exchange the thing with respect to the currency. When we go with the barter, we can't do or assess the present value of the particular thing. Now when we go with the banking business model, it's gradually grows. The banking business is gradually grow. There is in the earlier and the traditional banking, where earlier there was a no saving habit in the persons. Then slowly and gradually the saving habit was cultivated. So they go with the saving and lending function. In the earlier era, The bank was performing the two functions, the saving and the lending one. There is a rate fluctuation between these two. When we go with the FD saving over there, we are getting at the present rate, we are getting 6.7% rate of interest. If we go with the normal FDs, or if we go with the senior citizens FDs, it would around 7 to 8% the rate of interest. And when we go with the lending, they usually charge 1% higher. How the bank would earn the profit? If they are providing us the services, how they gonna render or earn the profit? By the variation in the rates. When they go with the FD, they can give the interest on FD at the rate of 6.7%. When they go with the lending function, they usually charge the 7 to 8%. There's a difference between these two ratios, and this is the profit margin of the bank, right? And the second way of by discounting the bill, they can go with the discounting model. They can go and discount the bills, and before maturity they pay around 80% or to 90% range. There's a 10% difference, that is the their profit or earning amount, how they gonna borrow or earn the profit by rendering the services. So banking is the system that renders the services. They can act as a safekeeper too. How they can act as a safekeeper? They can provide a locker facility. In the locker we can kept our gold, we can kept our securities, and they can also provide the function of demat. We have to link our demat account over there. The securitization concept was referred. So this is the concept that each and every part they are charging amount. That was their business services, their rendering service render charges, you can say, and through which they are earning the profit. So this is the concept how the banking come to existence and how they're gonna earn the profit from the retail individuals. When we go with the banking scenario, when they just cater the need of a individual and they try to settle the plans. There was the two type of the bank. One was nationalized or government owned bank, and other was the private sector bank. Sooner or later they get merged. Till recent, there is a merger acquisition concept was done where the number of banks were merged with another to improvise their facilities. Private sector bank are providing a higher facility with the quick access, right? They are introducing their app down. You can now download their app and you can operate or go with the 24 into 7 banking. But when we go with the traditional banking or the government bank, they are not updated, their app are not properly working, so there is need to go to the counter over there. And they have also the private sector have also bank have also launched the ATM machines where they are using the logo that you need not to stand in the queue over there. So this is the overall scenario about the banking, what is banking and how they gonna charge the amount of the interest. Just have a look over the conceptual part, what they want to say about the banking system. That retail banking is known as banking business with the individual. As I told you, the retail means that who can directly deal with the individual. That saving habit or until 1990, when we talk about the banking, they usually deal with the lending and borrowing function. There is a no separate market over there. When we talk about the individual borrower or the Indian mentality, they usually limited to the extent of the lending and borrowing function. So when we talk about the banking, there are the two categories we can divide the bank. First, when we talk about the individual aspect, when we talk about the firm aspect. When we bifurcate the banking in the individual aspect, we are having a retail banking and entrepreneurial banking. Retail banking, those are the end customer or the individual. Then they talk about the entrepreneur who are enter into any kind of the business. Either they can go with the agriculture or they can go with the micro small scale individuals. Then there's the next concept of the MSME. When we go with the entrepreneurial MSME, there's a Aadhaar link program, UI Udhyam scheme that was linked with MSME. Our Aadhaar get registered and we can open an account, or we can get our business registered as an individual in MSME individual concept. And when we go with the firm aspect, there are the two other model. One was the wholesale model and other was the MSME firm. Over here we are having a Udyam registration, but over there we refer the verb firm, means the group of the person. So when we try to divide the banking, initially we can bifurcate it into two parts. First one is individual, other one is firm. When we talk about the individual, there are the two sub bifurcation. One was retail and other was entrepreneurial, and these two are having their two sub bifurcations: small retail banking and class retail banking. And when we go with the entrepreneurial model, it is having a agriculture and MSME model. When we go with the firm, they are having two bifurcation: wholesale and MSME firm. So hope the concept of the overall view of the banking was clear to you. Now there is need to consider the product they are offering. When we go with the banking system, they can offer us credit card, insurance, investment, or the securities. They can issue, there's a bank known as SBI. They are having an invest app where they are issuing the securities, right? In this way they're gonna launch the product. There are multiple product option over there. Then we come to know about the channel, how they gonna distribute these multiple products. They can go with the, they can make a call by using call center, by making the telecalling. They can send the product when you are visiting the branch, then they are offering you the insurance policies, the security plans. Then they can go with the internet or kiosk machine. These are the system or through which they can sell their product. The product was sold by the channels, and the customers, the target base to whom the product was sold, to the customer, that small businesses and to the corporate. So in short, how we can classify these things and how we can say that a particular product is to be bank are dealing in the product. So first of all, there is need, once we talk about the intention of the bank, there must be once there is the intention of bank is to sell the product, there must be a product. First thing before selling, there is the existence of product. Existence of product. First of all, there is need to identify the product. Once the product is identified, there is need to distribute channel. There is need to know the distribute channel, how we gonna distribute the product. Then to whom the product is to be distributed. To whom the product is to be distributed. This is the main concept and the scenario when we go with this concept. Existing of product means the system that are available. Either they want to sell the credit card, they want to sell the insurance, they want to sell the investment or the security. This concept carry the things which product they are offered. Then second is the channel through which they're gonna distribute. Either they're gonna make a telecalling system, or they can go with the concept of the branch visiting, or they can go with the concept of the internet or the kiosk machines. Then to whom, to the target, who is your customer, the consumer, the small business or the corporate. So in this way they're gonna run their channel. Hope the concept is clear. Now we'll move to the definition. What is the concept of the retail banking and how we're gonna classify or define the word retail banking. Retail banking is divided into two functions. First we can divide it into the word retail and other is the banking. So retail means to say the individual, who deal with the individual. When we say the banking, who basically do the function of the lending and borrowing. Lending and borrowing. So the person who is doing the function of lending and borrowing and registered under a regulatory law is known as bank. And and those banks that deal with the individual needs is known as retail banking system. So we'll refer the word of retail banking over here, what they do say in their definition. Retail banking is known as consumer banking or personal banking. By name, it is clear. They cater the need of the financial services, right? So in this way, we are saying when they try to cater the need of the consumer, whether they need a money, they need a credit, or they want to deposit, the society or the association that do the particular function and have a regulatory emphasis is known as retail banking. Hope the concept is clear. Now, which type of the product typically they are deal with? First of all, they are dealing with the deposit accounts. They can go with the saving bank. They can go with the current account. They can go with the RD, FDRs. They can go with the zero bank account. They can start with the minimum balance account. They can use for. If we talk about the nature of account they are providing, then they go with the retail loan product. They have to assess the market need. Then they start the loan product like home loan, auto loan, consumer personal education loan. Now they have started a new business of marriage loan. This is the new branch, new loan product that they have launched in their retail businesses. And the services they are providing, like they providing locker facility, they're providing depository. As I told you, they are acting as a custodian depository, and we can open a depository account over there where like cash and entries are adjusted. If we bought the security, then it get credited. Otherwise, it get debited if we sell the security. Then we can go with the bank insurance, and the mutual fund concept is very much clear to you. When we try to diversify our fund and we are having a knowledge about which equity or which debt is feasible, then we can go with the mutual fund assessment, or the mutual fund manager gonna manage our fund. So these are the typically type of the product they are dealing with. Now, just have a look over the characteristics of the bank. What's the basic characteristics the retail banking do have? First of all, they target individual, as I told you. They have their main focus is on the market segment, and they try to cover large population. Then they can go with the either the physical mode or the virtual. When we go with the physical mode, we have to visit the branch. When we go to the virtual mode, we can access the our account by using the internet, or by using the mobile banking, or by using the login password. So they usually provide services to the small and medium businesses. Like, this is the concept of the retail banking. Hope the concept is clear. Is there any question? No. Shall we move forward? Okay. What's the advantages? What's the basic advantages? They are basically based on the client based services. Customer loyalty is must. We have to join a new customer. We have to find a new customer, as well as we have to maintain our presence. So we have to change our policies as per the taste and need of the customer. There is need when we use with the stable model, there are less volatility in the businesses, right? These are the basic advantages we can see in the retail banking. Although there is a advantages at one end, and we have to face the pros and constraints on the other end. First is regarding that if we are not updated ourselves, we are not moving to the technology end, then we are not able to cope up with the customer need. As the government bank the get out of the eye of or vision of the customers, because they are not providing services. The employees those are sitting, they just try to ask the customer to come again another day. You have to visit another again to the branch. You have to come back and brought that particular document. They just don't opt or try to opt for the new technology, that they can access to the e-wallets, they can access to the e-Aadhaar messages, and they can verify the Aadhaar by using the online services. They are not referring these type of services. They said to the customer, just brought your Aadhaar and come on another day. These are the provision they are using. They are not trying to update or try to cope up with the technology change. So with the change in the technology, there is a rapid evolution. We have to cope up with the society. Once we are trying to cope up with the society and try to make or provide the things as per the customer need, we are able to identify and try to maintain the customer trust on us. So we can go with this scenario that the cost of maintaining the branch network and handling the large number of the low value transaction tend to relative high. Means to say, when we are not updated to the technology, we need a personnel who gonna answer the each and everything. But when we go with the privatized bank, they just have you heard about the chatbot? They had activated a plan of chatbot on the online side over there. There is a chatbot. It might be named like Pihu, Siri, like whatever the name. They're gonna answer the instant problem of the customer, like regarding the credit card, they regarding the loan. If the recent pre-fetted program was not available over there, they can give option that you want to contact to the executive. Once you click on the contact your executive option, then they lead a number over there through which you can access to their executive and get your query rectified or your grievance redressed. So this model was usually opted by the banking who was working on the private ended, not by the government owned ended. So what's the reason of the growth over there? When we see there's a reason of growth, we need to make a stable and constant deposit. We should try to reduce our cost. When we try to reduce our cost, and as well as to try to upgrade ourselves to the new technology, we try to make a trust and relation between the customer. When we make a trust and relationship, it's just not about making a relationship, but try to maintain the relationship and try to provide the value added services, and try to provide the services which are result oriented. Our aim is to maintain customer, as well as to earn the profit from the customer. As on an another end, there is to provide the good quality services to the customer. Whether the bank is providing services, yes, bank do provide the services. They are providing the services of home loan, or we can say the education loan. Although they are selling the product, like they are selling the insurances, they are selling the securities. So make it sure the services or the commitment that we are doing with our customer, we are able to fulfill those commitment. If we are if for the purpose for selling the product, we are telling a lie, but on the later part the customer is not getting any kind of the facilities from us, then it would reduce the level of the trust, and there is a higher customer switching rate from your bank to another bank. As we can normally see, normally the bank are providing the FD rates between the 5 to 6%. In the present scenario, they are providing 6.7%, but there is a Yes Bank who is running on the private end and providing the 7.1% just to attract the customer. So there's a competitor policies too. We must have to try to cope up with those policies so that we can subsist in the market, right? Hope the concept is clear. These are the point we have discussed. Now we'll move to the purchasist. We have already discussed the point that there must be stable and constituted growth, low cost of fund. There is need to maintain the CRM of the customer. There is need to increase the subsidy. Try to reach or access to the each area so that by name or by the brand you can get identified. There's need to it cause better yield and better bottom line of for the bank. Then the next concept is economic revival, and the next is minimum marketing effort is required to be done if we are having a well-known brand or we are providing the good services. The customer would come to ourselves by own. There is no need to do the more and more marketing for particular thing. Now the next concept is regarding the purposes for the success of the retail banking. First of all, what thing we have to improvise in ourselves to do or to for the success of the retail banking. We can say for the success of the retail banking. First of all, there must be a proper or efficient delivery mechanism. Means to say we have to provide the quality services. If we are providing the quality services, customer are having a good thought process and they are thinking that we are providing the cost effective services with the least or with the minimum cost, and all the services are up to mark, and we are not telling any kind of the lie to sell the our product. Then and when we try to sell the product or do the efficient mechanism, then our customer trust get higher, right? They can retain with us, we can retain them with us. So first of all, there is need to provide the quality services. Once we are providing the quality services, the next step is to able to deliver the product and services so that they can feel safe, secure, prompt, and cost lead the thing as a cost effective. Next is regarding direct banking and the fastest growing dominant channel of the future. Like we all know that with the passage of the time, the everything get developed. Same in the system of the banking. Earlier they are just restricted to the lending and borrowing function. On the later end, they have introduced the insurances, they have introduced the securities, they have updated their channel. There is no need to stand in queue. You can go to the ATM, you can withdraw the fund, you can deposit the fund over there, you can change the pin over there, you can update your mobile number. So a lot of the technology with the passage of time, they get updated in the machine, so it would reduce the personal personals over there and reduce the cost over there. So we can see there is a normal growth that we can see in the banking sector from the last 5 years. It would be, as if we want to estimate, it would be around 20% that we can see in the banking sector. Next is regarding the product appropriateness. First of all, when we try to sell any kind of the product, either we can go with the insurances, either we can go with the securities, either we can go with the bank account options, either we can go with the loan option. Make it sure the things that you dictate to the person or try to sell in our or we can say in the bank premises must do the KYC of the particular thing. Once you are assured that the particular thing and the particular person is right and genuine and providing the good services, and the services that a particular person assure would provide the same services to the same person who is standing before that them. So make it sure the product must be appropriate. Let's suppose I took an insurance of 1 year. Have you heard about the term insurance that was referred as 1 year? There's a hidden clause over there that them you must have to pay the premium for the at least 13 years, or there is another clause, hidden clause over two. So once if they are making assurance that they're gonna pay 1 year at the time of the natural death and 2 year at the time of the accidental death, they are selling their product because of this clause that they're gonna pay 1 year at the time of death, whether they are implementing these clause or not. There is a one case I told you that a person bought an insurance. Let's suppose a person bought insurance from the insurance company. It would normally take, when you sign the check and you sign the insurance, that they're gonna issue a cover letter that your claim start from that particular date. Instead, it would take a time 2 to 3 days to initiate a proper policy over there, and you get the brochure and each and every factor regarding the cards and whatever the thing. It would take time, so it would take 4 to 5 business day to do the whole process. A took the insurance. At that particular person took the insurance of 1 year. Within 5 to 10 days, the person died. He just paid a single premium. What the insurance company do? They are saying they hadn't initiated the insurance cover in the name of that particular person because of some technical issues, and there is a holidays on the end of the, and the person wouldn't allow them to withdraw the fund from their account. or because of fund inefficiency, the person stopped the payment for 2 to 3 days and refuses and said the company no to apply for the check. But what happened? They have already initiated the cover note in the name of the person. At the time person signed the insurance policy, they just try to wait from their liability. They have to pay once a year in respect of one single premium amount. So this type of the nature of if their insurance company using such type of the things, it would adversely affect their reputation in the market. So make it sure what the thing you committed, you are providing those things. So this is the concept of the product appropriateness. Next is regarding the pricing. Make it sure by going through the concept or the mindset of the Indian mentality. What's the Indian mentality over there? I'm not targeting anyone, but I'm just normal talking about the Indian mindset over there. I'm also talking about my mindset. What our human mindset is like that. We want to pay less. We want to pay less and want higher returns. So before deciding any kind of the pricing, any kind of the asset or giving the weightage to anything, there is need to assess the competitor policies as well as the human tendency plus market strategy before deciding the pricing for any kind of the product. Right? Hope the concept is clear. What is the concept of pricing over there? Now there is need to move to the next point, scoring model. This is basically done by the bank to know about the simple score of the person, whether the particular person made any kind of the default in the payment of any kind of the loan. If a simple score is good, then the person is having a good credit worthiness as a borrower, then any person or any bank can lend the money as per the good simple score, that they are having a surety that particular person gonna pay the amount at one at a when desired, right? So when we going through this model, they can go with the simple score, checking of the simple score of the person to know the credit worthiness. They have also initiated this particular score in the retail banking. Hope the concept is clear. No, there is a concept of the consumer protection environment over there. Why there is a concept of consumer protection environment over there? As I told you, the example of insurance company that they sell the product, that they show the person that they are gonna send 1 CR on the death of the person. They sure or try to indemnify the loss. A person died, but the company refused. There is a infringement of the right. They have purchased the product. They have signed the thing. They have initiated the policy. Death is uncertain. Death is certain, but time is uncertain. As I told you, death is certain, but the time of death is uncertain. When we go with this scenario, when the time is certain and death time is uncertain, then how can we assess if we buy a policy? Let's suppose I buy a policy today, and day after tomorrow I died. What would happen? Didn't my family get the claim? They are getting the claim. If I signed a policy, I pay the first premium. From that particular day, the chances of they start covering the loss, and they try to indemnify my loss to my family. If I died, what would happen? They're gonna indemnify my family in respect of the money. So when we are trying to sell any kind of the product, there is try to maintain the consumer protection, and try to make the thing sure that if we are providing any kind of the services to any customer, make the thing sure that they get satisfied. In the same way, we try to provide or try to weigh the unfair practices they have inserted the consumer protection environment over there. There must be a grievance cell who gonna provide the proper services, and there must be a separate authority who gonna deal with these type of the grievances regarding the protection of the financial protection or regarding the product grievances. Right. This is the concept or why there is a need of the consumer protection environment over there. Hope the concept is clear to you. Good. Now we'll move to the concept of the challenges for the retail banking. First of all, the consumer protection pricing. Sometimes bank, what did they charge? They charge the extra money without any reason. Sometimes you ever see, sometimes they charge the transaction charges over there. Sometimes they charge the minimum balance account charges, or sometimes they hadn't provided services, but still they charge something. So they without any reason they are charging something. So to provide these things, there is a consumer protection and pricing policy over there to avoid the arbitrary concept, so that they wouldn't charge any. amount without any specific reason. When we go with the when we want the business model would run in a successful manner, there is must be a pricing policy. We can't discriminate it on the basis of the sex or caste, creed, and there must be on the assessment of the risk or the competitive value or the value added services. We if we want to make it successful business model now, we there is no need to do the discrimination. If we enter into any kind of the discrimination, we can't make our model successful either. It might be possible it sometimes why they refer this clause, because we can see there is a concept of equal pay and equal wages for the equal work. There is a no discrimination on the basis of the sex. If a female woman or a female is doing a work in the same category and the male is doing the work in the same category at the same capacity, with the same skills, then pay must be equal. But in reality it wouldn't be so. The same concept wouldn't get applicable in the case of the banking. They said there is a no discrimination clause, or we can't, if we want to make our business model or retail banking model successful, there is no need to do and go with the concept of the discrimination, or we can say with the competitive policy or the value added services. We have to avoid these things. We There is no need to do the discrimination on the basis of these things, so to make our retail banking model successful. Second is regarding the inadequacy of MIS. When we talk about the retail banking, it have to maintain the lot of accounts, lot of customer have to deal, so there is need to maintain the accurate data. uh, if we are having a proper or appropriate scope of the management of the information by using the IT and technology, we are able to handle the records. Otherwise the thing get hodgepodge, and we are not able to maintain the profiles of the person, and we are not able to make the things in more effective and efficient manner. So to avoid these things, there must be a proper educate system for recording the or keeping the record of the customer. Now the next scenario is regarding the understanding of the KYC and AML issue. Normal, what would happen in the recent year? You have seen the bank has introduced the concept of the KYC, know your customer. KYC basically known as know your customer. So what did they do? They have linked up Aadhaar with PAN. First, the government has launched the provision that you have to link Aadhaar with PAN, and you have to submit both your document with the bank while opening the account. Or if you have already opened your account, you have to submit the Aadhaar and PAN. This basically thing is done to avoid the duplication of account or duplication of the signature. Sometime what would happen, a person usually do the fraud by selling the forged property and transfer the fund into the account, and later on once the fund get deposited over there, they withdraw the fund and close the account. So to avoid these type of the scenarios, they can go with the fake Aadhaar card. They can get the account open in their name. So to avoid these things, they have launched the system KYC system. So once the bank, if any person who want to open the account in the bank, have to do or get the KYC done over there. So the bank would know the customer, whether the particular person is genuine, whether their Aadhaar and PAN is associated with that, and when the fund get transferred over there, this is to be maintained. And same is the concept is applicable when a company is selling a third party product over there. They have to do the KYC for the particular companies too, whether the company was genuine, whether the product they are providing are genuine, are they what the thing they are committing, are they providing the same to the persons or not. So these are the concept of they are following over there, whether the things were done in a proper manner or not. Right? This is the concept of the KYC or AML over there. Now the next concept is regarding the managing risk. When we try to manage the risk, first of all, there is need to know which type of the risk are associated. Either it is associated with the operational risk. If we go with the concept of the operational risk over there, then there is it is also related to the delivery channels. So there is need to assess where the risk is associated, how we gonna manage, try to mitigate the risk. It might be possible sometime account name we get wrote misspelled, or there is a misspelling in the signs, or we can say there is a differentiation or risk that is associated with the interest rate, liquidity risk, or we can go with the spelling risk over there. So these are the type of the risk that was associated. There is need to mitigate the risk, there is need to evaluate the risk. Once the risk get evaluated, there is need to do the proper step, or try to initiate or take the initiative so that we can avoid that particular type of the risk. Now The effect of the distributive channels over there. When we try to when we go with the technological aidment in that particular process, our main purpose is to avoid the fraudulent activity that was allowed by the way of the impersonation. As I told you, sometime what would happen, normally this would be happen in the case of the forgery over there. A person make a forged document. Let's suppose there is a person A who represent him as a Neha, like Neha has been represented by A as a Neha. So that particular person make a fake Aadhaar card in my name and get the property registered and get the sale proceed transferred to the account, forged account. So to identify that particular thing, they have launched a proper system. So that's why they try to go with the KYC norm, and they have also tried to identify those things which was normally enter or deal in particular type of the nature of the activity. So they try to curtail those activities. Normally the present and the where as per the advancement of the technology, there is a provision that you have received a message. Once you have clicked the link that was provided in your message, your whole bank account get empty, or the fund get transferred to the another account. The reason being that there is a fraud, online fraud over there, or sometimes the person asks made a call to you and asked that he was calling from the bank, that particular bank that you are having account, but you hadn't pay your you hadn't submit your Aadhaar PAN with us, and you have to send the OTP that we're gonna send you, and after that your Aadhaar and PAN get link over there. The person who was not aware about this scenario, they disclose the OTP that was provided on the given number, and after that their account get emptied and the fund get transferred over there. So to avoid these type of the technologies, they have made a strong network to avoid these. They get aware the customer about by giving the various advertisement, by organizing the campaign over there. But still, the crime was still prevailing in this market. They startedly try to make these type of the crime. Normally, the high tech criminals are involved over there. Next is regarding the continuing growth. When we talk about the bank, our intention is to be survive for the numerous years. So once we are having a target population, we have to make the plan accordingly. We must have a potential that we can grow within a period of time. There is need to consider which type of the population we gonna target. So these are the things that we consider when we go with the retail banking scenario. The next is the reason for the growth of the retail banking. In summarize, we have done in the upper part. Now we'll go with the conceptual one. What's the concept over there? Risk of the young Indian professional who gonna contribute. The person who is earning gonna contribute, and they're gonna contribute on the national GDP too. So to avoid these concepts, there is need to rise the young Indian professionals. The person number of the person who are involved in this process. When we go with the rise of young Indian professionals, the normally the middle class person are become the main source of their, or they are opting for the high end income household expenditure, and they try to borrow the fund from the market. Have you heard the concept that was given by the Ranbir Kapoor when a person was dancing over there, and he was applied for the loan over there, and then Ranbir was saying that नाचते नाचते आ गई इनके घर में खुशियां, kind of concept है ना. Then where the amount get deposited to the persons who had applied for the loan over there. So these are the type of the concept that was prevailed in the market over there. Then there is need to know about the economic superpower. When we talk about the growth or the amount that the banking was contribute is lead to unfold the various event or the growth stories that was done by the economic reforms over there. Then there is need of market financial reform. There is need to update the society. There is need to try to evaluate or eliminate the factor that would adversely affect the market. Our main concentration is on the mass market area. What's their intention over that time? Which type of the product are they preferring? Are they go for the loan product over there? Are they go with the personal loan, home loan, automobile loan? Which type of the market segment are there? We have to crash that particular market segment, or we can go with the various model that whether we can go with the debit card, credit card, ATM facilities. Then once we going through this model, there is need to evaluate the volume, which type of the customer we gonna tackle. what's our intention, where we want to be after 5 years, what are trend over there. We have to make our policies accordingly. Then there is need to move to the automation system, that we can go with the online transaction. Automatic machines are already settled that they're going to publish the we can say the our passbook. They can accept the checks from us, or we can say they're gonna settle the account. There is a banking system that basically tackle the system of Sukanya account. There is a GBP based model over there who gonna tackle the things and try to manage the system. There is a artificial technology, there is a advance due to the advancement of artificial technology over there. We are able to do a lot of stuff by using the machines, right? There's the next concept is to make the financial liquidity in the asset. Once we go with the concept of the banking, make it sure the thing get easily liquidated or get financial liquidity, so that the things is to be easily converted into cash, and we can able to or assess our cash criteria, and we can fulfill our basic needs. So this is the main contention behind that. Now, changing the consumer demography. Next concept is that there is a concept of the change in the consumer demography. As the population grow, with the passage of the time, the technology get updated. There are a lot of the positive factor we can see due to the demographic change. There are a lot of negative factor we can see. If we go with the positive factor, they have updated a lot of things. We can go with the concept of the technological innovation. There is a internet banking, there is a phone banking, mobile banking. We can access our account by sitting anywhere and anytime. There is a no need to stand in queue. There is no need to bound to 9 to 5 working. We can go with the 24/7 anytime anywhere approach. We can refer this concept. There's a need to increase the bank liquid cash. When we try to go with this model, there is need to strengthen the bottom line of the bank. When we refer the past, what would they do? They try to consider on the those vehicles, those special purpose vehicles which would generate the maximum profit. Because when we go with the retail business banking, they more focused on the loan and advances. But now they have moved or diversified their income streams. They have moved to the insurance, they have moved to the lending function, they have moved to the security function. So they have increased their boundary limit. Next is regarding the declining the cost of incremental deposit. Sorry. Declining the cost of the incremental deposit. When we talk about the declining the cost, their bank was paying a lower rate of interest on the saving account. Usually, they just want to reduce their cost of operation, and they have changed the tenure from when we go with the lending function, loan function. Normally, they have go with the industrial loan system where they are referring the loan for 15 to 30 years. But now they're gonna reduce it to the tenure of 5 to 7 years. This is the system what we are seeing in the present scenario. Now we have to look in the future. What would be the retail banking in future? What impact would be there? First is regarding the digitalized banking. As I told you, now we are switching to the digital money. In the starting of the chapter, I told you that we have moved from the paper or coin to the digital money. Then we can access to our account by 24/7. We can go with the digital banking option. We can use UPI, mobile wallet, internet banking. There is, as far as the services, the facilities are increasing as related to that particular things. Threat is also get increased. We are having a threat that if we lost our ATM, and the person who get our ATM with having a knowledge of the ATM password, they can withdraw the fund. Or the threat is like the person who is an unauthorized user may access to your account by using the fake site. Sometimes it might be happen we have used the unauthorized site, and that particular person can access to our information. It might be possible, or they by link they can get our money withdrawn from bank. It might be possible. There is a fake phone call that there is a call from bank. They want to link your Aadhaar with PAN. But what would they do? They just withdraw your money by the generating the OTP over there. So frauds are also goes on increasing. There is need, if we are updating towards the technology, the criminal also updated towards the technology. They get high tech. In the earlier era, they break the wall and do the lookering of the house and try to fetch the fund or try to grab the money. But now they do the technical fraud. So how we can get them tracked by using the IP address from where the fraud actually committed. So this is the mainly scenario we can see in the banking sector. Now, there's a rapid updation of the blockchain by the retailer. First of all, there is need to know the concept of the blockchain. Blockchain has a potential to solve the challenges by offering the faster transaction time. It would lead to more transparency, lower the cost, or we can change the money transaction equation. So when we go with the Forbes who wanna develop the blockchain model, there are few benefits that we can see on the screen. That blockchain record and validate the transaction. There is no need of third party approval. Then blockchain is always decentralized in nature. Then the next is blockchain is a new technology that will be updated in the bank in sooner time, and the blockchain is basically powerful and the secure technology that would be easy or to adopt in the financial domain, or we can say when we go with the complex banking model over there. But when we opt for the blockchain, we can get the things done within a minute. There is no need to stand in the queue. So when we try to shift or try to modernize ourselves, we try to update ourselves, we can go with the blockchain model. Then there is a concept of the artificial technology or artificial intelligence and the data science in the banking. As I told you, there is a chatbot named PU. This is the concept of the AI. This is artificial intelligence. All the features are updated over there. There is a combination of various methodological operations over there within the machine, that the particular machine get be answerable to a particular question. If the particular question is up to the mark or the pre-fitted function, then they can answer accordingly. Otherwise, they can ask for the executive reference, right? And when we go with the data science scientists, first our intention is to fraud prevention. We have to try to identify the things through which the fraud occurred or fraud committed, and then there is need to maintain the transparency, try to check the transaction. We can go with the GPS access based tool. Now next is anomaly detection. Basically this is a concept when we go with the insider trading. Insider trading is a concept when a person is having a knowledge, a person is having a knowledge, price sensitive information. We can go with this scenario, right? Then there is need to go with the customer analytics. How we gonna go with the customer analytics? There is need to go with a mix of customer delight. Try to minimize the error. Then there is the concept of the risk maximization or the risk management. As we all know, risk and return are associated. In the same way, when we go with the risk and human, two areas human concept is used over here. When we go with the risk management, to try to minimize the error that was committed by the human being because of their unintentional way out, there is need to reduce these effect. So to avoid this, there is a concept of the risk mechanism or risk management over there. There is the algorithm trading over there, so the person can't able to track the exact thing how they gonna do the digital transaction over there. Next concept is regarding the algorithm trading. When we talk about the algorithm trading, there is a machine who deal or try to reduce the human error and try to extend the credit worthiness. Next step is regarding the cyber security to be a top priority. When we talk about we are getting digitalized, there is need to protect the digitalized era. This is to be protected by the cyber cell. Cyber cell is basically a authority who gonna check the crime that was committed online. It is basically the IT crime. These uh, authority may be known as cyber authorities, and they basically make a cyber check over there. Is there any kind of the threat or fraud over there? They're gonna monitor and check these things. Then there is the payment innovation model over there, and they can opt to do the B2B model. B2B model basically stayed with the business to business model. They can go with the NPCI model. With the advancement of the technology, NPC is based on the National Payment Corporation of India. These are basically the agency that was governed by the RBI. They're gonna reduce the payment tenure. Then they can go with the SEPA. SEPA is basically the single euro payment area. This was scheme is in the EU, has significantly brought down the settlement time. When we try to usually to transfer the euros, we can go with this model too. This will allow the bank and the financials to upgrade themselves for faster and simpler model, less complicated business to business model, increase the payment volume. We can transfer a lot of amount by using this model, and this would provide the digital wallet and mobile payment system. Next is regarding the rise of the big tech in the banking industries. There are the various tech firms like Apple, Google, those are providing the payment services from the several years to till now. Mostly when we talk about the liabilities and tenure regarding these, when we try to update ourselves or try to develop ourselves, we are looking for those companies who will bring the finance banner with us, like with Apple with the card showing its prominence. Google and Stripe, PayPal are preparing to start and expand the banking business by going with the payment or the card services they are referring. So this is the thing they are using when we go with the industrial model or the rise of the big tech company in the banking industry. They are trying to shift it themselves to the investment models, or we can say to the banking models. Usually they just want to build up their scenario or try to upgrade their self. There are certain lack over there, they try to improvise these things. So that's all for the chapter number 1. Now we'll move to the chapter number 2. There are 10 minutes left in 1 hour, and we try to wind up by this chapter by within 1 hour. I'll try to complete this chapter. Hope the concept of the first chapter is clear to you. Over there, we're gonna discuss about the chapter number 2 is basically deal with the retail banking role within the bank operation. What's the role of the retail banking? There are the three major approaches that was followed over there: the strategic business model, the department approach, the integrated approach. When we talk about the strategic business model, first of all, there is need to divide the business. When we try to diversify the line of the business and try to automate the divisions accordingly and try to make the assess accordingly, our objective is to, when we go with the concept of the strategic business model, our objective is to go with the MBO process over there. What's the technology we are using, whether we are able to cope up with these things or not. So we are using the SBU model over there. When we go with the departmentalization, we didn't divide the function, we divide the department who are performing the functions. In the first part, we divide the lines. We are dividing the business into lines. Which type of the lines? Like either they are dealing in the production, either they are dealing in the manufacturing. Pardon. Either they are dealing in the textile business, either they are dealing in the extracting business. We have firstly divide the thing according to the line or the nature of the business. Second is regarding the department, the function are performed by the department, like whether this function is done by the production department, this is done by the finance department, this is done by the marketing department. Here the work is divided or approach is divided according to the number of the department working over there and what each department would do. What's the role of the manager over there? Are they doing the concept with the chain of command and change of unity of command or unity of direction? Unity of direction is followed over there or not? This concept is to be done and checked over there. Now the next concept is regarding the integrated approach. What's the integrated approach over there? When we go with this concept and the scenario, there is need to know when we try to reduce the risk and increase our profitability by using integrated model. Here we can go by using this concept, we can make the separate entity for the each business line. We can go with the integrated model like this. We can make a separate business entity with each business line. So if we go with this particular model, we follow the principle, like we can go with the product, we can go with the process, we can go with the delivery channel over there. So these are the concepts that we are following in the particular scenario. Now there is need to know the business models. The last part of this chapter is business model. When we talk about the traditional banking model or the domestic Indian banking model, they just more focus on the positioning. They just want to rank themselves in the first three positions. But when we talk about the strategic business model, they just don't focus on the positioning, or their main objective is not to come on the position, any position, but their main objective is to concentrate on the business objective. Are we providing the good services or not? It's not about the position. We just don't need not to window dress ourselves and to achieve the position over there. We have to concentrate on our objective, what the objective we are taking, and whether we are able to carry our objective with us or not. Only then we are able to know our business model is successful. When we talk about the international banking model, they just do focus on the business objective, not on the positioning objective. So this is all that's all for the today's video lecture. We'll start the chapter number 3 in the next video lecture. And when we go use this particular model, our aim is to target or earn the profit. But before earning the profit, there is need to maintain a good and cordial relationship with our customer and try to maintain the customer trust with us. So that's all for the today's